Morning, Steve Fried in Chicago with the morning grain comments. Well, behind me is a field of both corn and soybeans here in northern Illinois near our house. Again, these fields missed all the damage of last week's heavy winds. And I think one of the big stories overnight was the fact that USDA dropped the corn crop rating 62% versus 64% last week. Pretty much all states saw a decline except for Ohio and Wisconsin. Your best crops are still in Illinois, down in the Delta, Michigan, Ohio, and Wisconsin. And you still have the lowest crops in Minnesota, North Dakota, and South Dakota. In the beans, they dropped ratings to 57% good to excellent versus 60 last week and 72 last year. Again, Michigan, Missouri, North Dakota crops improved. Arkansas, Ohio stayed unchanged in relatively high numbers. Your best crops again, Louisiana, Michigan, Mississippi, Tennessee, Ohio, and Wisconsin. And Pro Farmer Tour, they found a 185 corn yield in Ohio versus USDA's 193, last year's 171. South Dakota 151 corn yield versus 133 USDA and 162 last year. So I think it drops the Ohio number by 30 million bushels, but would increase South Dakota by 100 million bushels. Again, I think the USDA numbers are pretty close, but the tour will continue through key states the rest of the week. U.S. Midwest next week turns cool and wet. We could probably see something in Minnesota and Iowa, 0.4 to 1.5 inches, maybe a little less rains as it moves into Illinois and Indiana. The 10 to 14 day, though, brings heat and dryness back to the northern plains and U.S. Midwest. We are watching pretty closely higher ocean freight rates causing less buying by end users. There's congestion in the China ports due to zero tolerance on COVID, which is slowing some of the unloading there. We did see that China continues to buy maybe 3 to 5 cargoes of U.S. beans overnight, with Chinese hog numbers up and crush margins a little bit better. Supplies of beans and meal domestic is tight, and so I think that will continue. Still no buying in the corn market. Prices may be a little bit too high. We also note that Malaysian palm oil prices are lower. Dalian meal and beans are higher, and so is the oil, but corn is lower. Canada canola crop could be below 15 million tons. Their wheat crop could be below 24 million tons. And Russia's export tax is trading more like $70 a ton versus 30 quoted, which could slow some of their export numbers. We'll be watching some of the news on COVID and whether it affects demand. We'll be watching anything out of Washington as far as policy on the Fed interest rates. We'll also be watching the events in Afghanistan and also just kind of the money flow, with funds a little reluctant right now to buy the grains and oilseeds until they have a better reason. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.